first Monday of the month, we're going to highlight technical reading for major indices across the Asian region. So let's take a look our latest reading for the index. So we start with the first one with FTSE Asian 40 index. As we highlight last week, we expecting the the index to drift lower and testing the support at 9,600. The index has indeed drift lower, but it did not break our support, appearing the ASC testing the new low at 9621. Again, I think at least 3 times for the past 2 weeks. So because of that, the stock is actually the index showcasing some sort of resilience within those particular level. Do note the support is actually within the fractional version of 38.2 Fibonacci level, and if you look on the chart on the screen, you can see how the stock, the index is actually quite decent recovery for the past 2 days. So a successive gap up move has showcased that the index could actually creating something that we call a breakaway gap. And last Friday again saw the index breaking above the downtrend channel, which began since August. So this could be an early indication that the new up cycle is actually began. So if you look on the RSI over here, the reading also quite positive. You can see the trend for the momentum has changed from downward to upward. So we see a breakout move last week. So we think the higher momentum could actually drive the recovery, particularly in FTSE Asian 40 index, at least near term. Now moving into Malaysia index. So as per last month report on the 2nd October, we highlight that the index could actually trade lower, but the downside could be kept within our designated support. So the index did not break our immediate support at 1410. The subsequent rebound saw the index form a new baseline right within the 200-day moving average, and last Friday gap up move is effectively kickstart a new up cycle. So we think the prospect for KSI index turn much more positive. You are seeing a new breakout move above the 50% Fibonacci fan line. Also backed by positive reading in both RSI and MACDs. We think there's decent chance for the KSI index to trade higher, looking to set the next the next resistance at 1464 and 1483.5. Meanwhile, for small cap index, previously I think we did mention that the what we call it, the small cap index could drift lower in the correction mode. It was in the correction mode, but the downside was kept within the major 200-day moving average. The subsequent recovery saw the index form a new high-low structure. Last Friday again, breakout above 20-day moving average, momentum breakout as well. MACD about to turn bullish as well. So we think there's a decent chance for the prior uptrend to continue. So the next target should be paired at 16,440 and the surgical level of 17,000. So be in mind, that means the domestic sentiment is actually improving. So we think there's a decent chance for the the year-end rally to continue, at least in near term. For JCI index reversal move, we've seen on the JCI index falling wedge pattern breakout. So there's a decent chance for the index to trade higher as well. With the next target is actually at 6852 and 6987. Meanwhile, for idea sector healthcare, the major correction of wave 5 of the wave 2 is completed right within at 1370. So within the new major wave 3 going to unfold in the near term. So the next target should be at 1515 and 1620. For Philippine PCE index, we earlier had anticipated that the index going to consolidate. While it was indeed consolidate, the downside was kept within our support, and the index has continued to testing this level until last Friday. It was forming a variation of Morningstar. So we think if you look on the RSI, it's pretty much looking about quite well supported. So because of that, we think there's decent chance for technical rebound, at least in near term. Downtrend channel is still pretty much intact. The next target will be 6180 and 6400. So for Philippine industrial index as well, the pattern is similar. Is still in the downtrend mode, but we are seeing what we call a rejection within the so-called rebound zone of RSI. So that actually could kickstart a short-term rebound, at least near term. We are looking at the immediate target at 915 and 9070 point.
For SCI index Singapore, the consolidation within the falling wedge pattern could actually at the tail end, but this falling wedge yet to break because it's still trading below its pattern neckline. But momentum breakout, as we've seen on RSI and positive in MACD, could actually has some sort of booster to lift the index higher. So we think there's decent chance for the SCI index at least challenging the index sub resistance at 3,200, while we peg the next resistance at 3,330. Support will be at 3050 and 2970. For IHS REIT, downtrend still pretty much in there. Technical rebound in the card, momentum breakout, and we expect the rebound could extend further. With the immediate resistance is actually paired at 1040 and 1080. For Thailand, SCT index was indeed drift lower as we earlier has expected. The rebound that we saw for the past few days could extend further. Trend is still pretty much down, but we think there's decent chance for the index to challenging at least our immediate resistance at 1416 and 1503. For my index, the downtrend still intact, but technical rebound is possible. So we expect the index to trade higher toward charging the next level as 440 and 467. Last but not least would be Vietnam index. The consolidation within downtrend channel about to test their upper channel. So we think improvement in trading volume and MACD could actually leave the index higher as we pay our target at 1,100 and 1,150. That's for Vietnam index. Meanwhile, for HNX index, the small cap index for Vietnam also showcase similar pattern, although the rebound could not be as stronger as VN index. So that means upside could be kept as we think the rebound could see the stock as the index to challenging the immediate resistance at 225 and 236.
Do 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 do.